All right, admitting, recording, we're moving.
Okay.
I think that's
Hi,
it.
everybody. Micah, I see you. Heather, hello. Whitney, hi. And Gina, and Samantha, I see you too. Since it is 5:35, we're going to go ahead and get started. If anybody else hops on, they can catch up, but we don't want to keep those of you who've already been waiting any longer. So I'm going to start by sharing my screen, and then as we go through, and I'll go through the process of buying a home from start to finish. So you'll see me pop up every once in a while, but as we get to a certain phase in the transaction where another person in the industry would be the best person to present you with information, we'll switch the screen over to them and let them kind of tell you about what they do in the home buying process and how they can help you accomplish your goals. So we're going to go ahead and share the screen. And I need our host to enable sharing the screen. Chad, can you enable screen sharing for me?
Sure can.
All right. While Chad is doing that, I'll go ahead and just tell you about our presenters. Today we have Chad. Chad Helmcamp is a mortgage lender with Because We Care, or BWC Lending. He is the owner and founder of that company. We have Alex Massa. He's an appraiser, owner and founder of Enitech Appraisals. Generally, you won't interact a lot with your appraiser, but an appraiser is an important part of the transaction. So we want him to talk about what he does. We have Mark Rafail. He's an insurance agent. He owns a farmer's office over in Greenway Plaza. He does homeowners, flood insurance, life insurance, auto insurance. If there's an insurance product, he probably sells it. We have Travis Kepp. He's a home inspector. He's someone that you'll talk to a lot during the transaction because you'll meet up with him during your inspection and then you'll probably call him with questions later, but he's very valuable. And we have Deanna Mellis. She is our VP over at Doma Title Company. And she's been doing this a long time, and she's going to explain what a title company is, what a title policy is, and why they matter, because that's one of the people in the transaction that is there the whole time, but kind of no one seems to notice them. So we want to make sure that you know who she is and what she does, so that when you're working with her and her team in the future, you're not in the dark about what they're doing. Okay, I'm going to try to share my screen again. And it looks like I can. That's great. Wonderful. Okay. Let's see. All right. Can you guys see my screen? Great.
Beautiful.
Beautiful, right? And now I'm going to make this presentation full screen as soon as it loads. Great. Minimize this and full screen. Okay. So you've decided you want to buy a house, and now you're taking the first steps towards learning about the process. And usually the first thing you do, other than this class, is choose a realtor. You want to choose somebody that is knowledgeable about the process, has experience in areas that you might want to live, works the way that you like to work, and someone that has strong industry partners. There are, I want to say, over 500,000 realtors in Houston, Texas. So you have a lot to choose from. Not all of them are full-time, not all of them specialize in certain areas, and not all of them know what they're doing, because the requirements to become a realtor is about $1,000 in about 20 hours of your life. If you complete 20 hours of education and pay your $1,000 in fees, you are a real estate agent. So some put more effort into being good at it than others. I hope that when we're done with this session today, you'll know more about me, feel more comfortable with me, and be interested in working with me. If you are, that'd be great. If you're not, I completely understand. But just make sure you choose someone that is going to meet your needs. That's the most important thing, because it is a very, very large transaction and you want to feel well supported. Your next step is generally to get pre-approved. You can't start looking at houses until you know how much a house you can afford. So you want to start the process by figuring out that part of it, figuring out what you can afford. And you'll do that by checking your credit, getting in touch with a mortgage lender, and having them do a ton of research on your financial history to determine what you can and can't buy, so that you can take that information back to your realtor, and we can start pulling lists of properties that are going to work for you in the neighborhoods you want to live in that meet the budget you and your lender have determined you can spend. So with that, I'm going to stop sharing my screen, And we're going to invite Chad to tell us about his business and how he can help you accomplish your goals. There we
All
go.
right, here we go. My turn. Let's see here. Reclaim host. Now I'll share my screen. Hello, everybody. I'm going to share my screen real quick. All right, here is my home buyer workshop. Did I share the right screen? Can y'all see that? Okay.
Yeah.
All right. So again, my name is Chad Helmcamp. I am a loan officer and have been for going on 20 years now. I started my brokerage about 3 years ago, BWC Lending, because we care. And basically, I've been in the mortgage business for a long time. I really, really love what I do. I'm fortunate that I met Angel, I don't know how many years ago now. We've been working together for a very long time, and we've got a great working relationship. And I think you do refer me because I do care. And so what I'm going to try to do is run through I can get a little long-winded, so I'm going to try to be fast. And then, of course, if you've got questions or concerns, you can always stop me later. When choosing a mortgage lender, there are a number of different types. You've got mortgage bankers, mortgage brokers, portfolio lenders, as well as hard money lenders. I technically fall in both the in both the mortgage banker category as well as the mortgage broker category. All a mortgage banker means is we close and fund loans in our own name, and then we turn around and sell those mortgages after we close. A mortgage broker means that we will close and fund those loans with the actual investor who's going to end up servicing your mortgage, okay? The reason I started my own company is I wanted to have that flexibility. I wanted to have a little more flexibility as far as loan programs that we can offer, as well as the being a little more competitive on interest rates. I'm sure like most of you on this call, you're probably all very well qualified. And if that's the case, I wanted to make sure I was competitive. And so far, it has proven to be true, having gone out on my own 3 years ago. Our lending process, okay? We try to distill this down to keep it simple. 4 steps in the process. Number 1 is applying. The application takes about 15 to 20 minutes typically. During that process, we're going to be, this is the pre-approval process. We're going to get your application. We're going to ask for pay stubs, bank statements, potentially tax returns, W-2s, things like that. We gather all that paperwork, review it, make sure you're qualified. Then we're going to send you an email to schedule a Zoom loan meeting with me. During that Zoom loan meeting, we're going to do exactly what we're doing now, which is basically me sharing my screen with you, reviewing your application, and reviewing the loan options you qualify for. Once we have you pre-approved, I'll send you notes from our meeting along with your loan options. I'll send Angel notes from our meeting, letting her know exactly what your goals and objectives are, along with your pre-approval letter, letting her know that you're well qualified and ready to go find a home. She will get you under contract. Once you go under contract, that's when we enter the process, the second phase, which is our processing and underwriting phase. We're going to take all of your paperwork. We're going to submit it to the underwriter. We're going to order an appraisal from Alex. Travis, meanwhile, Angel's going to be talking to you about Travis and things like that. That's sort of going on while we're doing some of the loan process. We're going to be reaching out to Deanna, opening title with her, and then we're going to be communicating with Mark to make sure that you've got homeowners insurance to insure the collateral. So all of that's going on during the processing and underwriting phase. A normal process would be 30 days. It can be done faster than that if needed. And sometimes contracts can be a little bit longer if there, maybe things in the process that take longer than anticipated, whether it be inspections or things like that. Through that process, we usually have a conditional loan approval within probably about 7 to 10 days of having started your loan application. A conditional approval simply means the underwriter has reviewed everything and made sure everything looks right for the most part, but they may have questions about large deposits. They may have questions about a pay stub, any number of things that you provide, because we do request a lot of documentation. Once we have that conditional loan approval and we satisfy those conditions, we submit back for our final approval and clear to close. We enter the clear to close phase. That's when we start communicating with Deanna to finalize all your numbers for closing. Okay. So this whole process, again, takes about 30 days, and there's a lot of different things all happening simultaneously. So how do you get a mortgage? So let's talk a little bit more about the pre-approval process. We call it the 4 C's, basically credit, capacity, collateral, and capital. We're going to talk about each one. Credit being the most commonly asked about item. So what is a good credit score? Well, the answer is it really depends, and depends on what type of loan program you're looking for. But on the right, you'll see we have 4 different loan types: conventional loans, which are Fannie Mae and Freddie Mac loans, FHA loans, VA loans, and jumbo loans. But generally speaking, to qualify for the best of everything, you have to have a 760 or better credit score. Every 20 points your score drops below 760, you'll have adjustments to the cost of your loan. The adjustments to those costs don't tend to get to be real dramatic until the credit score drops below 680. But again, there will be adjustments all along the way. What program is right for you really just depends. And that's why, the most common question we get asked is, what is your rate? Well, it's just too hard of a question to answer because there's too many details that go into that question, i.e. what size home are you buying? What type of home are you buying? How much are you putting down? And of course, most importantly, what is your credit score? On the left here, you'll see the things that compose your credit score. The most important of which is payment history. The credit, you'll see 35% of it is your payment history, to which the old adage of paying your bills on time is the most important detail. And so that's why I always tell people, no matter what you do, make sure you don't miss any payments. One late pay can drop your score by as much as 100 points, and it can take almost 3 years to fully recover. Okay. 4 C's of mortgage lending. Capacity. Capacity just simply means, what is your debt to income ratio? How much home can I truly afford based on the income that I earn? Okay. So the debt to income ratio is a percentage of your gross monthly income that goes to paying your monthly debt payments and is used by us to determine your borrowing risk. A low debt to income ratio demonstrates a good balance between debt and income. On the right, we sort of have a sample here of how we calculate it. So for somebody who makes $100,000 a year, works out to about $8,300 a month. And let's say their monthly debt obligations are credit card payments of $250, a car payment of $450, and a new house payment of $3,000. So the total of all of those debt obligations is about $3,700. And if you look at that debt to income ratio, that'd be about a 44% debt to income ratio. If you're looking at a conventional loan, 45 is really the limit we don't want to exceed. If you have really strong credit, we can get people approved all the way up to 49. And then some of the other loan programs like FHA and VA have more flexible debt to income ratio numbers to work with. If you read a book about buying a house, it'll tell you that your total debt to income ratio really should be around 38%, and that your housing debt ratio should be around 28%. So that's sort of what the books say about it, but there is flexibility and there are exceptions to every rule there. Collateral. So the collateral, this is really the home that you're buying. That is the collateral for the loan. Alex, who will talk about the appraisal process in a little bit, that's really a big part of where he comes into play. We've got to make sure that the home you're buying is good collateral for the mortgage that we're going to provide for you. I'll let Alex talk more about that in a bit. Lastly is the capital. The capital is simply your down payment. How much are you going to put down? On the left here, you'll see what the down payments are for conventional loans. You can put as little as 3 or 5% down for conventional. FHA is 3.5%. VA, you can put as little as 0 down if you're a veteran. And then lastly would be jumbo loans. Typically a 10% down payment is required. Occasionally for some type of professions, they can put as little as 5%, but 10% is usually the best thing to budget for there. The only thing that gets missed the most is, in addition to your down payment, you're always going to have closing costs, taxes, and insurance. And so on the right, you'll see that we, typically closing costs can range anywhere from, 2 to 5% of your overall loan amount. But when we go through our loan meeting, I'll go into that into a little more detail. All right, so here's a couple of examples of how we would calculate cash to close on a $500,000 purchase price, $25,000 for the down payment, closing costs of about 2%. So you're talking about total cash out of pocket of about $35,000. Okay. Loan products. So this last page here is really just to give you kind of an idea of the various different loan products we have, down payment requirements, credit score requirements, how much you can receive in seller or interested party contributions. And then on the right-hand side, you'll see the maximum loan amounts for these. I'll point out that the FHA maximum loan amount and the conventional loan amounts going up to $647,200, those are quite large. This is we've seen the largest increase from 2021 to 2022 than we've ever seen before. the conventional conforming rate loan amount went up by almost $100,000. I thought I would go ahead and put this chart in here to give you an idea of just what a great time it is to buy a house. Yes, rates have gone up in the first part of 2022. We've seen a fairly significant jump just in the first few weeks of the year, but we are still very, very, very low historically speaking. So in 2019, rates averaged about 3.94%. As of right now, we're quoting rates between 3.5 and 3.75%. So we're a little bit higher than we were in 2020 and 2011, but still very, very low historically speaking. So it's a great time to be buying a home. One more slide. Last year, home prices increased by almost 16%, one of the largest increases on record. So yes, home prices are increasing, but I go back to the other slide of just simply saying that rates are still really, really low. So it's still a really, really good time to buy. So we put in here, I wanted to show this kind of the cost of waiting. The expectation is that interest rates are going to move to either most likely by 4% by the end of this year, potentially as high. I've heard some people increase that to 4.5% just because of how quickly they moved in January. So just wanted to show you a $450,000 home at a 3.5% interest rate would produce a payment of about $1,900 a month. If you decided to wait another year and that same home increases by 16%, like I just showed before, and rates go up to 4.5%, then your monthly payment could go up as much as $575 a month. So the cost of waiting is pretty real. We don't expect home prices to increase by 16% this year, but I will tell you with what I'm seeing in January, it's going to need to slow down some. Otherwise, we will see another 16% rise because we're seeing a really, really hot market so far to start out in January. So, time will tell to see how that shakes out. I am going to send this slide to everyone. And what I want to point out here is at the bottom of this, that it says, please click here to view in-depth loan options. So the numbers behind these numbers are in that link. So you can just click on that because this is based on a 30-year fixed rate, 10% down with a 760 score. And lastly, this is my team. So this is, if you decide you want to work with us, you will likely interact with most of the people on this slide. But of course, as always, I'm always here to help in any way I can. Angel, that's it. Hopefully that wasn't too long.
I think that was great. Thank you so much.
All right, perfect. Let me stop sharing and make you host again.
All right, so Chad's going to give me access to share my screen again, and then I will go back through.
You're good to go.
We'll go back to this presentation, and that'll be great. Okay, so here we are. Everyone can see that, I hope. So you've met Chad, you've gotten pre-approved for a loan, and that means it's time to actually start considering homes. So we're going to start the search. There are a lot of places online that you can utilize to look for your next home, and also your home, like your actual home, not some place that you're renting. There's Zillow, Trulia, Realtor.com, Redfin. There are just there's hundreds of websites. I'm going to recommend that you use HAR.com, which is the Houston Association of Realtors, or if you've seen the billboards around town, it stands for Homes and Rentals. HAR.com is the local MLS, and it is actually ranked in the top 5 in the nation, behind Zillow, basically. Behind Zillow and Realtor.com. Somewhere really close to that is HAR.com. HAR is considered one of the best local MLSs in the entire nation because it's the only one that actually has a user-friendly front end. The owner of HAR really cares about making sure that the consumers have access to information that they need. So the front end of the website is incredibly fantastic. It has awesome tools such as you can search for homes based upon driving distance from a locale like your office. You can search based upon, different neighborhood demographics. You can search based upon neighborhood specifically. You can choose to, just draw a crazy polygon. There's a lot of different ways to search for properties. And they have an app that is actually quite robust and, again, very user-friendly. You can favorite things and your agent will see that. The only downside is the app doesn't talk to the website. So if you favorite something on the app, it won't translate to the website. If you favorite on the website, it won't translate to the app. So you would want to make a choice. Or just be aware that you need to look in 2 different places if you've been favoriting things. Other than that, it's absolutely incredible, and I think you should use it. So what you'll be able to find when you're looking online are photos, video, and 360 tours. 360 tours and video became more popular with the start of COVID, and some agents are still utilizing both of those tools. Some agents aren't, but you will find a lot of properties with video and 360 tours, which is great because these resources and these pieces of data will help you to determine if you really need to go see a house in person. Like no longer is it necessary for a buyer to look at 100 houses or even 20, because we now have the ability to look at so much information online. When my parents were buying houses, I remember one time the realtor came to our house, and I want to say it was like 1990, and they brought a black binder that had a bunch of single pages in there, and each page had one picture of the house and then all the details. And they had to flip through. I mean, this was a 3-ring binder. It was the thick kind, the one that you kept like all of your subjects in school. So it had hundreds of pages, and they would have to flip through these hundreds of pages and decide which houses they wanted to see based upon the details that were listed and the one picture. Now you get all of the details on HAR, which not a lot of people read them anymore, but you should still read them because it has good information like room dimensions, and if it has gas heating or electric heating, or a gas stove or an electric stove, things that might actually really be important to you. So you want to use that data plus the photos and video and 360 tours if available to help determine if a house is a good candidate for you to actually spend your valuable time going to see in person. So you'll take that information, we'll build out a list of properties that you want to see. We will schedule tours. We'll go look at those homes. And then you'll decide if there's any that are, good candidates for making an offer. If there are candidates to make an offer on, we'll prepare a comparative market analysis. And when I say we, I mean me. I will put together a comparative market analysis for that particular property, and I'll run a report comparing that property to other similar properties that have also sold. There may be similar properties on the market that haven't sold yet, but I really want the houses that have sold, because those sold houses will tell me exactly what buyers are willing to pay for a similar house. And that'll give me a good idea of what I could recommend to you to offer for that house based upon its similarities to the other house. There will be adjustments from those houses that have sold to make them more similar to the subject property that we're comparing it to, just in case they are different, unless we're looking in the suburbs at tract communities built by David Weekley or Perry Homes or D.R. Horton. Like, we're not going to be looking at the same house over and over and over again. If we're looking at an area like, say, the Heights or Montrose, all those houses are very different, but also similar. So it's my job to take those similarities and differences and put together a really good comparative market analysis to tell you a recommended offer price. One thing to keep in mind when you're looking at homes is the 80-10-10 rule. And that basically means if a house has 80% of what you're looking for, 10% of what you can tolerate and live with, and 10% of things that you can change in the next 10 years or so, then that's a house you should consider buying. Unless you're a millionaire, the likelihood of you finding a house that meets 100% of your criteria is very, very slim. And that's just because there's just so many things that can come into play, like proximity to other people, or the number of floors, or how many bathrooms a house has, or kitchen cabinets, or countertops. And some of those things can be changed. Some of those things can be tolerated, and some of those things are complete deal breakers for you. So a good thing to keep in mind is the 80-10-10 rule, so that we can get you into a home that's going to work for you, so that you can stop paying rent and also be happy in the home. Moving on, we're going to make an offer on one of those houses that we did the comparative market analysis for, probably the one you like the most. We'll want to use the CMA so that we can present the seller with a serious and realistic offer. Yes, this meme is real. Like, you can make an insulting offer to a seller. So you don't want to do that, because if you insult a seller, they could just flat out refuse to talk to you at all. And that may seem crazy, but sellers this is the house they've lived in. They might have emotional attachment to it. And so their emotions are part of this process as well. And we don't want to trigger them, basically. So we want to be realistic when making our offer. I know you want to get the best deal, and we want to make sure you get the best deal, but we want to get you a realistic deal and get you a house. We can propose great deals all day long, but at the end of the day, if we don't get you a house, then we've completely failed. So right now in Houston, we're seeing a lot of houses sell for the market price or even above list price. But historically, I think what we've seen most often in the past 10 years would be houses possibly selling for anywhere for about 1% below. Sometimes we'll see 2%, but on average, we were seeing houses that would sell for approximately 1% below the listed price. And the reason for that is that most houses are listed accurately. And they're listed accurately because realtors are paid to sell houses, not to list houses. So listing too high isn't going to result in a sale, and we're going to have an unhappy seller and an unhappy listing agent, right? So listing accurately and correctly gets the house sold. So we have a happy seller, and we also have a happy realtor, and we have a happy buyer. It also makes things easier for everybody involved. If you don't think you have to try and negotiate 10, 15, 20% off of things, then it's a lot less stressful. You should plan, though, when you make an offer, that there will be a couple of rounds of negotiations. It's not often that your first offer is accepted the way it's written. There may be some small changes that need to be made to meet some of the seller's needs, or maybe they do want more money, or they'd like a different closing date. So just plan to go back and forth a couple of times before you reach agreeable terms. It's also possible you won't reach agreeable terms, and that's okay. What's meant to be will be, and you can continue looking for the next house. But if you do reach agreeable terms and you execute a contract, congratulations, you've executed a contract. You're now about to enter into the actual contract period, and it's going to be a little stressful, but it's also really exciting. The very first thing you have to do when you execute a contract is pay your earnest money and pay your option fee. The earnest money kind of serves as a deposit, and it's typically 1% of the purchase price, and it genuinely indicates your level of earnestness and intention to purchase the property. Because if you don't buy the house, that money is not refundable. So you're telling the seller, I really want your house. I want your house so much that I don't want to lose these X dollars, and I'm going to give you these dollars to hold in the event I don't buy the property. And that money is held in escrow with the title company. You're also going to pay an option fee, which is 0.1% of the purchase price. Both of these numbers are negotiable amounts, but these are the numbers we see most often, the 1% earnest money and the 0.1% option fee. The option fee is a fee you pay in exchange for the right to terminate the contract within X days for any reason at all. If you pay an option fee and you decide to terminate during the option period, you do get the earnest money back, but you don't get the option fee back. The option fee is the seller's like liquidated damages, if you will. If you wait until after the option period to terminate your agreement, then obviously you wouldn't get the earnest money back. Texas is one of the few states that offers an option period with this option fee that you can pay to have the right to terminate for any reason. Because we have this option period with a termination clause where we can terminate for any reason whatsoever, so when most buyers conduct their inspections. The reason for this is there's no contingency in the contract built in specifically for inspection-related results. So the optimal time to conduct your inspections, negotiate some type of compromise over what you may have found, and either move forward or terminate is during the option period. So with that, during that period of time, you're going to do all your inspections. I have never seen a home this bad in Houston, but I have seen some pretty terrifying houses. This isn't something that most people would be looking for. I could imagine an investor looking at something like this, not the average person. So during the inspection period, you're going to want to conduct as many inspections as possible that are important to you. We're going to recommend that you do anything and everything that's important to you because it's a small price to pay for each of these inspections rather than being saddled with a large problem in the long term that you weren't expecting. So types of inspections you can get are general inspections, and that's the most common. A general inspector will do kind of like a general overview of the entire house, and then he may recommend that you want to have other systems inspected by contractors, or that you may need a WDI inspection, which is wood destroying insects. That is most of the time termites, but you could be looking for other things like beetles that destroy wood. There's a few other types of insects that can be pretty, that can cause some significant damage to wood. You may have pool inspections, but basically this is a foundation inspections. This is when you want to get anything inspected that you possibly can. One thing to keep in mind is typically construction codes are not negotiable. Your inspector will often tell you if a house currently meets the current codes of the time. If the house was built 10, 15, 20, 50 years earlier, it was built to the codes at that time, and there's no law in Texas requiring a seller to bring a home up to current codes in order to sell it. So you won't oftentimes see that as a negotiated item, but an inspector will bring it to your attention, and it is good information to have. Your inspector's job is going to be to kind of collect a lot of breadcrumbs and build out a cookie, and that cookie will represent larger issues. Travis is going to tell you a lot more about that. And then once he gives us all this information on the house and all the different things that are wrong with it, they don't usually tell you what's great about it. They usually tell you what's wrong with it. We'll take that information and we'll create a list of things that are important to you to either get remedied and fixed or to renegotiate the price so that you can fix it later. And a good rule of thumb is if the problem itself is less than $500, then it's not typically a negotiable item. That's more of a honeydew item. But for those bigger ticket items, say a defective water heater that isn't working, or a roof with an actual leak, or a foundation that has significantly shifted, pipes that are leaking, things like that, when those items, air conditioning systems that aren't working, when those things start to get up there in the thousands of dollars, those are items that we want to make sure a seller addresses before they just pass their house on to you. So moving on, I am going to unshare my screen and introduce to all of you Travis with Southern Star Inspections. He is my favorite inspector. He inspected my house and most of my clients' homes. I would say 9 out of 10 of my clients will choose him. He books up very quickly. You have to call him before you enter a contract and get penciled into his calendar. But he's one of the absolute best. He used to be in the home construction industry, so he has a ton of knowledge. Travis, go ahead.
All right. Check 1, check 2. Everybody can hear me? All right. I don't want to be that one video where I'm talking and nobody can hear me the whole time. So the only thing I saw in that picture that you shared just a second ago was just some paint touch-ups, Angel. Nothing much wrong with that house. Just some minor paint touch-ups. So my name is Travis Kepp. I'm the owner and the inspector, Southern Star Inspections. I've had my business now going on about 9.5 years now. And like Angel mentioned earlier, my previous background was building houses. Before that, in high school, I started out by framing houses. So this is kind of the realm that I've been in. This whole work industry is residential construction. A couple things about the inspection, just to start off. The number one couple things I tell clients all the time is that what it's not. It is not a pass or fail. Okay, so the inspection is not going in and saying, hey, this house passes or this house fails. The inspection that I do is not a buy or don't buy. Okay, and it is also not a good deal or a bad deal. Essentially, my job as a home inspector is to go into the house and try and unearth everything that I can, whether it be small or big, and then present it to my client in a nice, organized fashion. Whether it be a simple doorknob that's loose or a leaking water heater. It's all going to be in the report with pictures, and it all depends on what that particular client is looking for when they're wanting to purchase a home. If I do a house that is, let's just say it's built in 1970, and I'm finding things that, in my opinion, are pretty normal with the home that's built in 1970, sometimes a client might be okay with that and they're ready to take that on as far as, some things that they need to fix or repair. But some clients might think that they're really wanting something built in 2022. It does not matter. Whatever I can find, I'm going to present it. And it's always up to the client to make a decision on whether or not they want to move forward with the purchase. Of course, I'm always going to be there for any questions that you may have, along with Angel as well, when it comes to the report. The type of inspections that I do phase inspections. That's basically if you're buying a new construction home, I can do phase inspections, which is before they pour the concrete. Another inspection, phase 2 inspection, which is before they put up the drywall, or they call it a pre-drywall inspection. So basically I'm inspecting the frame, the plumbing, the HVAC, the electrical before they cover it all up, and then a final home inspection. I also do resale home inspections. So just like I mentioned earlier, if you're looking to purchase a home that's a resale home, I do those inspections, or an inspection that's just brand new construction. If you're going to look at an inventory home and a builder like Perry or David Weekley has a home for sale, I do those inspections as well. And then also lastly, I do 1-year warranty home inspections. So if you purchase a brand new construction home and you want to have it inspected before the 1-year builder warranty is over to catch anything before it goes out of warranty, I can do that inspection as well. The items that are inspected, for me, I inspect everything as far as the structure goes: foundation, exterior walls, windows, roof, attic space, mechanical systems such as your AC, electrical, or plumbing, appliances. I personally, as Angel mentioned earlier, I personally do not do termite, wood destroying insect inspections, pool inspections, or septic. Okay. Now, that doesn't mean that if I see termite housings or termite mounds or anything like that, doesn't mean that I'm not going to report on it. I'm always going to put that in the report, but I'm not a licensed inspector as far as a termite inspector goes. So I think, Chad, some VA loans, I believe, is the one that requires termite inspectors, or Angel. I believe that's correct. So there are some times where you have to have a licensed termite inspector, and I will always hear that, and I always make sure that I recommend that, as well as obviously Angel will do so as well. My inspection reports includes pictures, captions, arrows, kind of pointing out exactly what I'm talking about. I also include model and serial numbers to all the appliances in the kitchen and your mechanical equipment, AC unit, furnace, water heater. I also use a thermal imaging camera. Thermal imaging camera will help me find any possible missing insulation or moisture intrusion into the home. It's not X-ray vision, but basically it's telling me any type of temperature differences between the surface that I'm looking at and the outside temperature. I'm going to try and do this real quick. I would like to share screen. Host, can I share screen? Sorry. Should have done this right from the beginning.
Chad's going to set you up.
Mr. Chad. I'm the one that's probably done the least amount of Zoom calls, so everybody forgive me for. Okay.
You're on, brother.
All right. Let's see if I can do this. All right. Here we go. There's my lovely family, if you're seeing that.
Not yet.
Does anybody see this? And I will bail on this quickly if you're not seeing my screen. Are you seeing my screen?
No, we do not see your
No.
screen.
All right, I will bail on that. Let me see. I just basically wanted to show a sample of my home inspection report. If you wanted to, I have several sample reports on my website at Southern Star Inspections, southernstarinspections.com. I have sample reports on there that I could share with you, but I'm trying to do that here.
If you email one to me that's redacted, I will make sure to distribute it out to everyone on the call.
All right, I appreciate that.
I'm sharing the link right now in the
All right.
chat box.
I apologize for that. I'm going to bail on that. So anyways, so my sample, my inspection reports include, information about the home. My job is not only just to share deficiencies, but my job is to inform you about the home that you're thinking about purchasing, whether it be where the water meter is, main water shutoff valve, or a deficiency like shingles that are worn or have exposed nail heads or flashing that is not present. So a home inspection report is sometimes when I'm walking around with my clients and I'm showing them the things that I found, I feel a little bit like the Debbie Downer, right? I'm kind of pointing out all the things that are wrong or need to be fixed. But that's the job of the inspector, is to inform you about the home more than just the paint or the new appliances or the new granite countertop that possibly the builder has installed. I'm looking deeper in testing everything. I'm testing your oven, testing your AC system, your furnaces. I'm checking all of the hot and cold waters at the fixtures, making sure that there's no leaks at the drain lines or valves, flushing the commodes, making sure that there's no leaks at those, make sure that they're tight to the floor, getting on the roof. I personally still like to get on top of the roof as long as I can physically get up there. You know, a lot of times, usually the roofs that I cannot get on are mostly going to be the 3-story or townhome style homes, 4-story homes, unless there's a rooftop terrace, then I can get up there. But the inspection report is basically a snapshot picture of the day of the inspection, of letting you know what all we have found. And like Angel had said earlier, a lot of the items, if you're looking at a resale home, a lot of the items are going to be kind of under that homeowner maintenance type of items. Typically, any negotiations will be something where it's either A, damaging the home currently, B, something that is life and safety hazards, or C, something that's not working. So although I might call out sealing up around a hose bib, that is going to be a deficiency, but it's not necessarily something that the seller might be required to repair or do, versus a commode that is leaking onto the floor when you test it. So there's some things there that are basically, you know, where when you're looking at some resale homes, you're going to want to just realize that there's going to be some things that might need to get yourself out there and do a little honey-do list versus some things that you can negotiate with the seller. For me personally, I will always have the report to you by the end of the same evening. Sometimes it's late in the evening, but I will always have it to you when you wake up in the morning. It'll be in your inbox ready to go. So it's not a 2 or 3 day process for me. That's the requirement from Trek. But for me, I always have it to you by the end of the same evening. And I will always meet with you if you're available at the end of the inspection to go over items that I found, show you what I found, talk to you about those items that, you know, are going to be in the report, and then also answer any questions that you guys might have regarding your home. Again, it's me. Anytime you call me, there's no answering service. There's no, I'm the homeowner. I'm the home inspector. I'm the owner. It's always going to be when you reach out to me. So again, I'll send some of my sample reports to Angel to maybe kind of send out to you guys in email so you can take a look at those. And I always recommend that you call 2 or 3 inspectors. You know, for me personally, I want to earn your business. I want, you know, once I do your home inspection, I'm always there for you. So I feel like we build a relationship. I want you to feel comfortable with who you're hiring. I typically do 1 inspection a day. So I'm there typically anywhere from 4 to 5 hours on a smaller, newer home. But sometimes if it's an older home and has some size to it, I might be there all day, you know, and I'm not afraid to do that because I'm going to try and check everything I can before I leave. And then I'll have that report to you by the end of the same evening. So again, I really appreciate you guys coming into the Zoom call with us. And like I said, if you have any questions leading up to purchasing a home, Angel knows this too. If you are looking at a home and you have a question about something, you know, you can take a picture of it, send it to me. Maybe I can do my best to try and let you know what I see, even before going home and writing up a contract on it. So you can always contact me anytime. So I really appreciate putting this together, Angel. Thank you.
Thank you. That was great. Well, it's me again, guys. I am going to share my screen and continue on. As soon as Chad sets me back up.
Sorry, I took it away from you. Sorry.
It's okay.
Uno moment. Oh, I got to reclaim it. Yeah, they changed this feature in here, so it's a little different. Here we go.
It's a little tricky. I wish they would just set it up to where multiple hosts could all.
There you go. You're up.
Access. Okay, so here we go. We are sharing. All right, we're going to go full screen again. We're moving on to the appraisal and the insurance process. So, you know, we made an offer, we got it accepted, we started inspections. In the meantime, Chad is in the background with his entire team doing all kinds of horrible things to you, asking for all kinds of information, from bank statements to payroll stubs to letters of explanation as to why you spent X dollars or just made this large cash deposit. So he's doing all of this in the background, and you've made it through the inspection phase, right? We've negotiated and moved on with a price reduction or some repairs to be done by the seller, or maybe depending upon the market conditions of the micro market that we're in, you've decided that you are willing to deal with any of the problems that were presented during the inspection in the future, or maybe you got really lucky and there were no problems. But that's unlikely. There's going to be something wrong with every house because it's the one thing in the entire world that's still actually made by humans. There is no assembly line. There are no machines involved in the home building process. It's truly people doing manual labor. So, and people make mistakes. So things will get found. So we made it on though, we've made it past the inspections. We've made it past the option period. You've decided to stay in this game and buy this house. So at this point, Chad is probably going to contact an appraisal management company and order an appraisal. And I'm going to make sure that you are talking with an insurance agent if you haven't already started that, so we can get you set up with your homeowners insurance and your flood insurance, because those two things are important. So we'll start with the appraisal part. An appraisal is an opinion of value from one individual. You could literally have 5 appraisals and get 5 different values. It is from an unbiased third party. So like I said, Chad will contact an appraisal, I think it's an appraisal management company, and place an order for an appraisal. And then an appraiser will pick up that order and agree to do it. And then they'll go conduct the appraisal and send the report back. No one knows who the appraiser is leading up to the actual report coming back in. And the reason, we've had it kind of set up that way where it's a third party that no one's actually in communication with since the bubble, that big 2008 mess, because there was some collusion between lenders and appraisers back then. So now it's highly regulated and they can't actually talk to each other and say, hey, this house is worth this much. Can you try and make it happen? And things like that. When the market value comes in lower than the assessed value, it is possible to try and negotiate the price. It depends on the market conditions that we're dealing with, and if sellers tend to be winning a lot, and if it's a seller's market. If it's a seller's market, we may not be able to get a whole lot of price reduction from a low appraisal, but if it's a stable market or a buyer's market, we would probably see an adjustment there. But there may be other solutions as well. So we can talk about that when we get further in the process of, further in your personal journey of buying a house. But right now I'm gonna stop sharing my screen and I'm gonna hand over the microphone to Alex, and he's going to tell us what he does. All right, Alex, take it over.
Yeah. Thank you, Angel. You took some of my nuggets, but that's okay.
Sorry.
That's all right. My name's Alex. I'm the owner of Inditech Appraisals. We also own an appraisal management company, and I'll talk a little bit more about that. Before everyone logged in, we were chatting amongst the group here, and Angel said that she gets a ton of questions about appraisals. And funny enough, over the last couple of days, I was putting together an agenda for tonight's call. And I put together top 10 questions that I get from new home buyers and even from people that have been through this process before. And I'm going to go through them, and it's going to answer a lot of your questions. Basically, from what is an appraisal to who orders it, what are they used for? So we'll start with what is a home appraisal. Angel touched on this a little bit. It's just an unbiased opinion of value performed by a licensed or certified appraiser. Next question is, why do I need one? Chad touched upon this a little bit earlier. The appraisal is really an insurance policy, for you, and I'll tell you why. Just this week alone, when an appraiser goes out, they do a site visit of the property, they measure the property to confirm that the square footage is correct, because the MLS and tax information is not always correct. And there are times where the house isn't as big or is bigger than what's listed on MLS. And there's no way for Angel to know that because she doesn't measure house. The realtors don't measure house, but the appraisers will. So it's an insurance policy to make sure you're getting what you pay for. Second, the appraisal is going to be utilized for the collateral of the loan, which Chad briefly touched upon. Next question, what is it going to be used for? We answered that. What do they look for? What do appraisers look for? So when the appraiser goes out, it's confused often with the home inspection, which Travis talked about earlier. Appraisers are not trained to be home inspectors. They're really just looking for cosmetic features of the house. They're measuring the property. They're looking to see what factors are around the property that could affect the value. They're out there gathering information, and they're gathering that information in order to be able to compare it to other similar sold properties in order to provide an opinion of value. It's very similar to Angel's CMA that she talked about earlier, but more in depth, where we're actually analyzing the property, putting boots on the ground, looking to see what kind of upgrades and quality and condition the property has. And we're also looking for anything that could affect the safety of the inhabitants or structural integrity of the property. And if there are issues that are beyond cosmetic, the appraiser will mention them, and the lending team underwriter will require for those items to be repaired. It's not as in-depth as an inspection. Like I said, it's more of a visual snapshot, basically like we're taking a picture of your house. So that's what appraisers are looking for. How much do they typically cost? If it's your typical inner loop property, non-jumbo, under $1 million, or in the suburbs, non-complex, you're paying around $600 for this appraisal. There could be times where that cost could be more. Rarely is it much less. It's typically more when the property is complex, or if you're needing it in a short time frame. What are typical turn times for an appraisal? This has been quite an issue over the last 2 years, since it's been so busy and competitive. There is a shortage of appraisers for the type of market that we've been in. And there are times where appraisals were taking, close to 3 weeks for something very simple. And if you're in a rural area, you're looking at 4 weeks plus. So understanding how long appraisals are taking is very important on when you're going to order the appraisal. Right now, 2 weeks is probably a safe bet for your typical run-of-the-mill appraisal. When should the lender order the appraisal? This is actually a really good question. Angel, you mentioned something about the option period. Typically what they do is you sign a contract that you're going to close within 30 days, and you're given, you can negotiate this, but you're given about 10 days for the option period. And the rule of thumb has always been, if it passes the option period, the inspection's good, then order the appraisal. With appraisals taking so long, a lot of agents and lenders have been ordering the appraisal during the option period. They're getting the order in as soon as possible. So my suggestion is, if you're going to work with Chad, he already knows this, but if you choose not to, I'm sorry, you're going to have a rough patch if you don't, but have them order the appraisal up front. Who pays for the appraisal? The borrower will pay for the appraisal. It's typically their responsibility. And can the appraiser's opinion of value be influenced in any way? Angel talked about this third-party management company, and I wanted to touch a little bit upon that. After the crisis of 2008, they changed the rules on how appraisals could be ordered. Chad and I actually worked before that time, and Chad could call me up and say, Alex, I want to order an appraisal. Now, Chad is a really good agent, and he's straight as an arrow. Lender, and he's straight as an arrow. So he never tried to influence me or tried to bribe me, but I can tell you there are many lenders that did try to influence our opinion. So they developed what's called an appraisal management company, which is a third party that actually does the procurement and keeps that firewall between lender and appraiser. So we do that service as well. And then last, what are the qualifications for an appraiser? The appraisal license is the hardest license to get in real estate as far as real estate transactions go. For a certified appraiser, they actually just lowered the requirements. You used to have a 4-year college degree, go through 2 years of an apprenticeship, pass a test, an audit. They've lowered it to an associate's degree, 1 year training under a certified appraiser, 200 hours of classes, pass a 6-hour test, and an audit by the state. So it's still pretty involved, but the qualifications are there for your protection in order for you to get a quality report. So those are the top 10 questions that I typically get. I think those are the top 10 questions that you would want to ask. Really, at the end of the day, the only thing you're really looking for in an appraisal is, A, did it make value? And B, is it subject to any repairs? So if your appraisal makes value, which meets the contract price, you should be good to go. And if it's as is, that means that there are no repairs needed that you need to negotiate or get done prior to closing. That's the appraisal process.
Thank you, Alex. That was great. I'm going to, I'm not going to share my screen again, at least not for right now, because we're just going to jump into insurance, but I do want to look at my slides real quick so I can make sure that I'm properly giving you all the information that you need for our next speaker. So insurance. Well, I really only have one thing to say. Homeowners insurance is required on all mortgaged properties. So if you have a mortgage on a property, which most of the time you will, not a whole lot of people pay cash for homes, even if they can. Not a whole lot of people do, because why use your money when you can use someone else's, especially with interest rates being as low as they are. So if you mortgage the property, you're required to have insurance. So with that, I'm going to let Mark with Rafail Insurance tell you all about homeowners insurance, flood insurance, and everything else you can think of that you possibly need.
Thank you. Howdy, everybody. And Chad, I might need to also screen share momentarily if you don't mind.
Button it up, sir. Hold on, I gotta reclaim it. So weird how they changed this.
Don't fall asleep on me, folks.
Oh, go ahead.
Got
Sorry.
Got it.
Such professional. As
all
zoomed
you.
before. Calling for the ball.
Awesome. Great. Can I get a thumbs up if you guys see my screen? Awesome. Well, thanks guys for having me. I can vouch for each and every one of these panel speakers. I want to say it's been close to a decade that we've worked with each other in some capacity. And yes, Travis has got on my 4-story townhouse roof, and he made an exception for me. But I'm honored to be with you guys. And my name is Mark Rafail. I'm with the Rafail Insurance Agency. And, you know, I like play on words, and, you know, I titled this Protect Your Assets, and you're going to have an asset once you have a property. So let me come over here. We also have a team. My lovely wife is the office manager. I'd be in the streets homeless if it wasn't for her. I'm the front end, she's the back end, right? And I have a staff that really helps us, you know, assess your insurance. And we've been awarded Farmers Insurance, one of the top agencies in the country, ranked #1 out of 65 offices for flood insurance, business insurance, life insurance, and umbrella coverage out of 65 offices. And we service over 5,000 insurance policies today. I'm not going to toot my own horn, but somebody's got to do it for us. Being voted Houston Chronicle's best insurance agency for 2 years in a row. We had a billboard actually last month off of 59, and we were in the Chronicle a few months ago. So Insurance 101. I know Angel and others had some basic questions. Well, what is homeowners insurance? From a high level, guys, we're not insuring the house for what you bought it for. Believe it or not, we're not insuring it for the appraised price. We're insuring it for the replacement cost. Imagine the house burns to the ground today, and you got to call a custom home builder, because they're the only ones that's going to come in to remove the old house and rebuild it. So homeowners insurance is meant to rebuild your structure and cover claims that are covered perils. What do I mean by that? Generally, it's hurricanes that hit, busted pipes, fire. It even covers liability, your personal items inside, and even the cost to rent another house. Let's imagine this, guys. During the freeze, I'm sure you ran across somebody that had a busted pipe, and that busted pipe could have taken 6 months to fix because contractors were backlogged and maybe the home wasn't livable. Well, instead of staying on your mom's couch, which is totally cool, but you can rent a place, whether it's a hotel for a couple of weeks for the repairs, or maybe you need to rent a house for an entire year because you actually have to rebuild your house. So homeowners insurance is meant to rebuild your structure, and we're not insuring the land. So keep that in mind, guys. What are the different types of coverage? A single family home versus condo. Well, if you buy a condo, Angel will probably let you know that there's going to be something called homeowners association fees or condo association fees, meaning the condo association is going to insure the exterior shell of the building. So if there was a fire or hurricane, you are responsible for everything from the sheetrock in. So if you look at that, the cost per square foot for the build out of the interior of a condo might on average be about $100 a square foot, give or take, depending on the marble or type of fixtures. Now, to rebuild a house these days, with the cost of lumber going up and construction costs, it could very well be anywhere between $200 to $300 a square foot to rebuild. Okay. So a condo is insuring everything from the inside, whereas a homeowner's policy is insuring the entire structure plus the things inside. Are you required to have insurance? Well, as Angel mentioned, even if you're a cash buyer, right? And do you really want to self-insure one of the biggest assets that you have out there? But as far as most people that take out a mortgage, not only are you required to have insurance, but we want to have the right insurance, because, you know, there are different insurance companies out there. Some have a lot of funds in the bank, some don't. Some are name brands that you recognize, some aren't. So I'm actually similar to Chad in that I'm a farmer's insurance agent. However, I'm an independent broker. I could provide you options with different carriers or companies or different options similar to some of my colleagues. But for me, I think the claims experience is really important. And brands like your Farmers, your State Farms, your Nationwides, they have a lot of funds, which means they have employees, which means when a claim happens, I'll use the Freeze as an example. The companies that you call the Geicos, the Progressive, the 1-800 numbers, and they say, hey, here's your cheap homeowners insurance. And you say, gosh, that sounds good. When a claim happens, guess what? They're hiring a third-party claims company to come out. And I'll tell you the biggest difference between employing your claims department and outsourcing it to save some money as a company to maybe lower your cost on your insurance. Well, it took months to get an adjuster out or pay claims. Whereas if you have companies that are in-house claims, they're doing it by Zoom. They got boots to the ground. So it's a matter of getting your claim paid within weeks versus months. So it's my job to explain that, hey, you know, consumer, you know, maybe the one company is $1,000 more because they've estimated the reconstruction more accurately than company B that said, you know what, we're going to insure you at $100 a square foot on this 3,000 square foot house in the burbs. So I'll give you an example of a 3,000 square foot house in the suburbs. You buy it for, call it $400,000. It burns to the ground. You call a custom home builder. They say, gosh, it's going to cost you probably close to $550 or $600 to rebuild it. Well, then you're thinking, well, you're overcharging me on the insurance because I'm buying it for $400,000. Well, the cost of land in the burbs is much less, right? And the reality is, it's not going to be the builder that built the suburbs with the Costco buy in bulk discount. It's a custom home builder. Now let's flip the coin, guys. Let's say you buy a 2,000 square foot house in the Heights, and you're buying that for $700,000 because, hey, you're in the city, the land. So the $700,000 house you're buying might actually cost $600,000 to rebuild. So then somebody like Chad that's been in the game for a while will say, you know what, that is the cost to replace that house. Whereas somebody that's just, you know, flipping loans might say, you better take the loan for $700,000 or the insurance for $700,000 because we're loaning you that. So we're not insuring the loan, we're insuring the structure, guys. So just keep that in mind. When are homeowners not required to have insurance? When you pay the house off. But I'll tell retired people all day, and most retired people are wise. They work so hard to get in a position where they are able to pay off their house that they don't want to be in a position when a hurricane strikes that they're having to rebuild or fix their house. So a hurricane, guys, is one of the biggest exposures we have. Houston, we're kind of like, we're like this, you know, a stepchild in the insurance world because we're on the Gulf Coast. We had 14 named storms, guys, in the last hurricane season, and we're below sea level. So our insurance is going to be higher than your friends that are up in Connecticut. That's just the facts. We're on the Gulf Coast. We have storms, but the cost of living here is darn good. So take the cost of insurance and buy a good house and insure it properly. So it's important to be insured because you don't want to come out of pocket. I've had people underinsured or figure out that on a homeowner's policy, guys, you get what you pay for. There's good, better, best. And I always tell clients, insure for replacement cost and have all the endorsements. Endorsements are things you add to the policy. Example, what if the leak is a hidden leak and you haven't seen it? Insurance companies don't want to cover it unless you endorse it. So endorse your homeowner's policy for water damage, because that's the stuff behind the hood you tend not to see. And it's a slap in the face whenever you find out it's not covered. Now, what insurance will not cover, and usually Travis will catch this, is bad workmanship. So let's say you got a leak, a couple months later, and it's a new construction house, but we find out, you know what, that leak didn't get caused by the storm. It was caused by the roof not being installed properly. It was bad workmanship. So with these new hip builders coming in, buying townhomes, and all of a sudden you see these builders kind of coming in and going, it really is, you want to make sure that Travis looks at it and says that this house is in good shape, because if something happens after and it's not from a storm or a busted pipe, you can very well get denied a claim. Flood insurance. What is flood insurance? So homeowners insurance is going to cover if a hurricane or storm hits the house, creates an opening, and you got damage, or a busted pipe, fire, theft. But what if there is a hurricane, but it's just a bunch of water? You look outside and it's natural rising waters coming from the ground up, and it gets into your house. Well, guess what? Since we're on the Gulf Coast, it's the #1 natural disaster in the country. No insurance company wants to take the risk. So every single homeowner's policy, business policy, even renter's policy, if you're renting a house or renting an apartment on the first floor, will not cover natural rising waters that comes from the outside in. So guess what? FEMA, which is a government entity, is the main carrier that's going to cover flood insurance. Well, when Chad's coming to give you advice, the homeowner's insurance is required for the loan, but the flood insurance is optional when you are in a quote unquote X zone. Well, I hate the terminology X. What does that mean? All that means is you're in a quote unquote low risk zone. So it's up to you as a consumer to get flood insurance. Well, I'm here to tell you guys, almost 33% of floods that occur in Houston are in a low risk zone, which basically means you look outside, especially with suburban neighborhoods being built. I-10 is 21 lanes, high rises are everywhere. You better darn bet that it's a concrete jungle and it could flood anywhere, anytime. So if you're in a low risk zone, I tend to see flood insurance range now anywhere between $500 and $1,500 a year. And that is to insure gutting your house up to $250,000 and replacing the items inside up to $100,000. So up to $350,000 in coverage for generally between the $500 to $1,500 range in a low risk zone. If you're in a high risk zone, maybe you're on the bayou, you're in Bel Air where it tends to flood, you have to call, you have to get a survey and an elevation certificate, meaning you have to know exactly the elevation of the house to determine the rate, which isn't a bad thing, but flood insurance depends on the elevation. So I'm in the heights, guys. My townhouse was built 4 feet higher. My rate is the same as somebody in a low risk zone because my house was built up. But let's say you buy a house that is built in 1960, it's built on ground level, you're really at risk. So your insurance might be higher. So what I always encourage people as you're shopping for your home is look at the homeowner's insurance and flood insurance, because The things that drive the rate, guys, is not only the elevation, but on the homeowner's policy, it's the age of the roof, plumbing, and electrical. Because if you go buy this house and the roof is 20 years old, guess what? When the storm happens, your house is more likely to have a leak, and which is going to increase your insurance costs with different companies. But what Angel would probably do is say, hey, we're going to use this as a negotiation tool. Whether it's, hey, we want you to replace the roof, fix the roof, come off the price so my client could get a new roof, because the insurance is not only going to be higher, but once you get past 15 years on most homeowners carriers, they start to depreciate what they'll pay you to replace the roof if a claim happens. So as you start looking at homes, keep in mind, we always want to ask, what is the age of the roof, plumbing, and electrical updates? And something that Angel and I can do is something called a claims loss report. I can tell you if there's been a past claim on that property. And what does that mean? Well, let's say 15 years ago, 5 years ago, there was a water damage claim and client got a check for $50,000 to fix it. Well, instead of calling a mold remediation company and somebody licensed to do the repairs to make sure there's no mold, they called Uncle Joe. And Uncle Joe came in, ripped the sheetrock, fixed it. And you know what? Uncle Joe did it for $25,000. So they pocket some money, right? Well, because it wasn't fixed properly, maybe there's health hazards there, because a mold remediation certificate is really what you need after some type of water smoke damage. And if I'm the one to tell you, hey, Angel, there was a $50,000 claim paid out in 2017, you might want to find out who the contractor was and if they actually have some type of mold or water remediation certificate, because the buyer is going to want to sleep good at night, because mold is serious, guys. People could have some health hazards. So high level on flood insurance, we're all in a flood zone. FEMA is just so slow to say who's high risk, low risk. And it's the biggest exclusion on every policy. And on your homeowner's policy, I want you to know the way deductibles work. Let's say you have a $500,000 house that's the estimated cost to rebuild. 1% of $500,000 is $5,000. 2% is $10,000. So if it is a wind, hail, or hurricane, most of the time, because we're in Harris County, it's going to be a 2% deductible, $10,000. If it's not Mother Nature, fire, theft, busted pipe, it's going to be 1%. So you might be thinking, gosh, that sounds like a big number. Well, the hurricane claim that comes through, everybody on the block's getting hit. And if you've got water damage, guess what? The roof's got to be replaced. Then you got to do sheetrock, electrical. A claim that looks like, gosh, that wasn't so much, ends up being $75,000. Then you got to rent a hotel and all. They'll cut you a check minus the deductible. Now, if it's a total loss fire, guys, I want you to understand, we'll insure the house for $500,000. The insurance company is going to default and give you 50% of that number, $250,000 for your personal items. So that's $750,000. They're going to default most of the time and give you 20%, $100,000 to rent a house for up to a year. So this little old policy could end up paying upwards of $850,000. That's when you want your insurance. I'm in it for the big stuff. So if you have a claim, I always say call your agent, because if it's a leak and it can be fixed for $2,000 and you call and make a claim, guess what? A zero payout claim stays on your record. And even though you're like, why should that haunt me? Insurance companies will actually use that as data. If you keep making zero payout claims, eventually the big one will happen and it could affect your future rates. So before you make a claim, call your agent, get an estimate. And if it's above the deductible, then make a claim. Bad insurance ruins lives. Good insurance can save your life. And I want to talk about liability real quick. So scumbag lawyers, nothing against them. There's good ones, but start driving around 610, guys. Every other billboard is an attorney. Why? Because as soon as you look down at your phone and you text message, or you hit sweet old grandma or little Timmy on a bike, I use little Timmy as an example. A lawyer is going to sue you for, gosh, it could be $1 million, couple $1 million. Well, now you have a house, you have assets, and I want you to know how your liability can protect your asset. An umbrella policy. You can have $1 million in liability above your insurance. You could have 100 million, but I'm a firm believer. If you have $1 million in coverage, it covers your tail for the big stuff. And you know what? Bad things happen to good people. I mean, you look down at your phone for 2 seconds, you hit a bike rider, God forbid somebody passes away, and you find out, oh my gosh, my auto policy stops at $30,000 and I thought I had full coverage. Well, now the liability shifts to you. And guess what? A good lawyer will try to go after anything they can. Your rental properties, your assets. And if you don't have anything, they can ruin your credit and then you can never buy anything again. So friendly recommendation, guys, make sure you have a personal umbrella policy to protect your assets. They're generally low cost, guys. $30 to $60 a month is what I tend to see it. And let me ask you this, what's easier to pay? $30 or $60 a month or getting sued for $1 million, right? And then if you don't have flood insurance, FEMA is not going to come in with a cape and say, hey, we're going to help you out. They're going to say, we're going to give you a loan. Now you're paying a loan on $250,000 plus your mortgage. You're paying 2 mortgages. And then I'm a firm believer, if you're going to take on a debt, make sure you have the right coverage with life insurance to pay off the house, health insurance that if you get stuck in a medical situation, you're not foregoing your assets and not defaulting on anything. And then the last thing is we want to be your partner. So here's my contact information, guys. If I could ever be of assistance, please don't hesitate to contact me. And thank you guys so much. I'll pass it back. I'll pass the mic back to you, Angel.
Thanks, Mark. Hi, everybody. That was great. Thank you so much. You gave us a ton of information. He always does. Mark knows anything and everything about insurance. So if you ever have a question about that, just call him. Let's see. I think I'm going to share my screen with you again. I'm pretty sure that I am. So we're going to go ahead and do that and get my browser open and go full screen on this. And we're moving on. So you've managed to get through, you've set up your insurance, you've purchased your homeowners, you've purchased your flood insurance, you've made it through the appraisal process. Most likely the appraisal has come back as matching the value of the contract and as is without any required repairs. And so we're moving forward. If it does come in low, we'll cross that bridge when we come to it. If it comes back with a list of required repairs, we'll discuss that. It's not a real common occurrence. I've seen it happen once on a VA loan, and what we had to do was paint some sections of the house. So it wasn't a really terrifying thing that cost a lot of money. So we're moving forward in the transaction. We're getting closer and closer and closer to closing. Once the underwriter has finished going through your file and verified all of your all of your income and verified your employment and reviewed your credit for the 100th time and looked at your assets again to make sure that your savings is still, as flush as it was when you started the process, and make sure you still have the cash you need to close. And the appraisal has come in and they've been able to verify that the house is a good asset that's going to serve as good collateral for this loan. And your insurance paperwork comes back through, and they take your mortgage numbers and your insurance numbers and your homeowners association numbers, they add them all up and they make sure that this total payment is going to work out financially and not affect your DTI. Then you're going to be issued clear to close status, or CTC. That usually comes really, really close towards closing. Like it's oftentimes 3 to 4 days before closing. It can be sooner, but it's kind of usually right around there. It's just because all these moving pieces finally come together at what feels like the last minute, but it's not. It's just taken a lot of different people and a lot of different actions to get where we're at. And around the same time as this clear to close status is given to you, we're also going to be given a closing disclosure form, and that is sent out 3 days before closing, and it needs to be acknowledged by you. The form may or may not have the most accurate numbers that you need, because that form is constantly changing as data changes based upon interest rates, the purchase price of the home that may have changed a couple of times during the transaction, and then even possibly what you're putting down. Just different things are going to affect the numbers on that form, how much your insurance costs, if you changed insurance providers in the process, things like that. So those numbers are going to be changing. So they may not be completely accurate. That's okay. You're still going to acknowledge that you've received the form so that we can start a 3-day clock that allows you to actually close in 3 days. And there's federal laws in place that prohibit receiving that form and closing any earlier than 3 days. So if you want to close on time and you get that form 3 days before closing, you kind of have to acknowledge it. Otherwise, you're going to be pushing your closing back. And then by the time you get to the closing table, you will get an accurate copy of that form that it spells out every single penny that you're spending on the house now and over the course of your loan. You'll also get loan documents at the closing table and a variety of other things. I am now going to let Deanna with DOMA Title tell you what a escrow officer is, what a title company is, what a title policy is, and how she is not just with you on closing day, but she's actually there making things happen the entire 30-day period of your contract. So I'm going to stop sharing my screen and I'm going to hand it over to Deanna.
Hi, everyone. Thank you, Angel. So I thought it would be a good idea to start by explaining what a title company actually is. So when I started working here more than 10 years ago, I really thought the title company is where you go to sign the closing papers. So, and that's true, but there's actually a lot more going on behind the scenes. And I feel like most people kind of think that's what's going on at the title company. So there are two major parts to the title company. First, the title company is an insurance company. So they're ensuring the validity of the transaction. So they ensure that the seller has the right to sell the property, which is very important, especially if you're the buyer. And they're ensuring that the property is free of liens and judgments and anything that you would not want attached to the property when you purchase it. Also very important. So the title insurance premium is a one-time fee that happens during closing. This kind of insurance actually works backwards. So when you get a homeowner's policy or a car insurance policy, you're insured against things that could happen in the future, right? So title insurance is actually going to insure everything that's happened before the closing, everything in the past up until the closing date. So, but in general, the title company's main function is to protect your home ownership. So when you close, you know that that home is actually yours. So the title policy is good forever and ever and ever, as long as you own the home. If you happen to sell the property, the new buyer will get a new policy. So, okay, the second thing that the title company is responsible for is to carry out the transaction, however it was agreed upon in the contract. So we're a neutral party. We do not represent the buyer or the seller or you know, a friend that sent it to us or anything like that. So we're focused on the property, and then we also handle the money that's involved in the transaction. So now I thought I'd cover maybe a little bit of the contract to close process at title. So once you've completed the contract and all parties have signed it, that's when you're going to send the contract to the title company. And that'll probably be the first time that we become involved in the transaction. So at that time, you'll also deposit the earnest and option money with the title company. So the earnest money, as Angel mentioned, is basically a deposit showing good faith to the seller that you intend to purchase their property. So there are several methods of payment to deposit, such as we'll take a personal check, a wire, a cashier's check. Actually, at DOMA, we have an app that allows you to take a picture of the earnest money to make a deposit. It's just like your banking app if you use one of those. This is the safest and most secure way to deposit the earnest money, much more secure than handing a check from person to person until it makes it to us. So it's free to you, and a wire costs money. So we have a lot of people that use that. It comes in handy if you're out of state, if you're out of the country. Actually, the first time we used the app in my office, the buyer was out of the country. And so they wrote out their check, they filled in some information. We need a few things to help us match the check to the property. So I think you can put in the property address, your name, and probably your agent's name. And then you take a picture of the check. So you'll get an instant notification that the money has been deposited, and so will we, and we'll receipt your contract. So once your money is deposited, congratulations, you're in escrow and you're about to become a homeowner. So we immediately start working on your transaction. Our title examiners are like detectives. They're searching all of the property records for anything they can find that's filed against the seller or the property. So we search both. So once we've completed the search, the title company issues what's called a title commitment. So the title commitment is a promise to insure the transaction. And it does have several schedules on it. It's kind of difficult to read. It reads kind of like a legal document, but really something to remember on the title commitment is Schedule C, which is our clear to close. And Schedule C is something that the title company must clear before closing. So let's say you're the seller and you have a mortgage. The mortgage will show up on Schedule C, and that will alert the title company to order a payoff that we'll pay at closing. So we work with the seller to clear all of the items on that schedule before closing. So once the commitment's been delivered, we start working our way through the contract. So we'll order any required homeowners association documents if there's an HOA. One of the things the title company ensures is that the seller is up to date with their homeowners association dues and fees. I've actually personally called an HOA, and they had foreclosed on the property, so they didn't know why the seller was trying to sell that property. We got in touch with their attorney, and we were actually able to move forward, but it happens. So that's why we're checking those things for you. So we also make sure the survey has been received by the seller, or if they do not have an existing survey, we order it according to the contract. The title company will most likely only send you one document during the closing process with some basic information that we need. So we'll ask if you're married, for your lender information, your homeowner's insurance, and if there's a home warranty as part of the contract, we'll also ask for the home warranty company and the plan you would like to purchase. So it's actually pretty simple for the buyer. Most of our communication is back and forth with the seller. So you have it easy, but you're spending more time with the lender, I'm sure. The last thing that the title company will do before closing is work with the lender to finalize the closing documents. Once that portion is complete and the lender has a clear to close, they'll send us your documents, and then it's time to schedule your closing. So there's several ways that you can close. You can come into our office. You can close curbside. We'll go down to the parking lot. I guess, probably coming into the office is the most popular way, the most popular choice. We have a beautiful office. We would love for you to come in. So if you're out of town, out of state, out of the country, we can make alternate arrangements based on your closing. So there are a few things that you need to bring with you to close. First of all, bring your spouse. Even if they're a non-borrowing spouse, they will have to be with you. Bring a valid ID, any money that you owe for the closing. Your closing funds will have to be what we consider verified funds. So a wire or a cashier's check are really the only forms of payment the title company will accept at closing. You'll also bring any documents that your lender may require. It's not a bad idea to have a check with you just in case something changed at the last minute. Certainly probably the most common would be, if you do have maybe a home warranty. Let's say your home warranty is $500 and you decide to get the $700 policy. So you need to write us a $200 check. You can do that. Title companies will accept funds up to $1,499. So if your funds are $1,500 or more, you do have to run to the bank and get us a cashier's check, or you can send a wire. So really that's it. You made it. You're at the closing. We're on autopilot now, and we're just coming in for a landing. You sign your papers. You take a picture with a giant key and your favorite realtor, and then you're done. So one thing I do want to mention though, just because you signed the papers, it doesn't necessarily mean somebody's handing your keys. So both parties have to sign. You might be the first ones that came in. Also, the title company takes all of those documents and we send them to your lender. And the lender reviews the documents, makes sure that nothing was missed, they have everything they need, and then they'll tell us when we can fund. Typically, it's the same day. So at that point, you can have your keys. So this was a lot of information, I know, but I just want to say to everyone, really the number one thing for you to remember in the seminar is to call Angel when you're ready to buy a home.
Thanks, Deanna. So before we have a couple more things to do, but not much. We're almost finished. So I do want to kind of mention that. So I've been in the industry for 9 years now, and so that's how long I've known every single one of these people. I met every single one of them in my first year in the industry, and I'm still working with them years later. Mark provides nearly all of my personal insurance needs. Travis has inspected my own home. Chad did my mortgage and my refi. Deanna was not involved in my home purchase, unfortunately. I ended up with a really, really pushy seller who had already selected a title company, so we couldn't really negotiate that. Sometimes it can be, sometimes it can't be. The seller does usually end up picking the title company because they pay for the title policy, but it is a negotiable item, and I always try really hard to get someone that I'm comfortable with, that I've worked with in the past, because there is such a thing as a bad title company and such a thing as a bad escrow officer. So with any of these people, you are in great hands and you are well taken care of in your transaction if you choose to work with them. And I hope you do, because they're all the best at what they do. But we'll step away from that and not make you guys feel like you're getting a sales pitch, because we promised this was the information you need without the sales pitch. We have some prizes to give away. We have gift cards to a lot of different local places. So I put all your names in this basket. That way it's super fair. We're going to shake it up and we're going to draw a name. Whitney. And I'm going to share my screen so that you can see what we have to choose from, and you get to choose a gift card of your choice. Whitney, can you see that screen? Whitney.
Hi guys. No, I'm sorry, I can't.
All right, awesome. Whitney, what gift card would you like? Are you in Houston?
I am in Houston.
Okay, then these are all good options for you, because there's a lot of local businesses in here, but we have some nationwide brands as well. What would you like?
Okay, I'm Whitney in Houston. I actually can't see your screen.
Wait, you can't see my screen?
No, you didn't share it.
I just opened it, but I didn't share it. Shame on me. You're like, I'm still looking at Angel. How do I do this? Okay, escape. That's so weird. Okay, Zoom. Share the screen. Okay, here we go. Sharing the screen.
Oh, how neat. Can you still hear me?
Yes.
Okay, let's see. Wow, that's exciting. Okay, I'm gonna go ahead and go with, oh wow, that's really great.
Too many choices.
I know. I'm gonna do Amazon.
All right. Amazon for Whitney. Okay. I made a note of that, and I'll reach out to you to make sure that I have the proper way to get it to you.
Thanks,
Thank
guys.
you.
This presentation was fantastic.
Awesome. Thank you so much. All right. Shaking it up. You guys can't see it, but I'm doing it. All right. Sam, it's your choice to pick. And there is another Amazon card if you want Amazon, but you could choose from anything on the board. They're all options.
All right, thank you. I will choose Houston Dairy Maids.
Oh gosh, we're gonna be best friends. You know, I live like walking distance to the Dairy Maids.
Do you get samples every day?
Almost. I spend a few $1,000s on cheese a year, I think. And then I have to go extra.
Easy. Yeah.
All right, Dairy Maids is marked off, and that is for Sam. We're gonna shake this thing up again, draw another name. Heather. Everything's on the board except for Dairy Maids. What would you like?
Well, gosh darn it. I was going
I know.
use some Dairy Maids as well, but I'll take Lowe's just in case I do need to buy a house. I can use it in the future.
All right, Lowe's is a great choice because there's one not far away on 610.
Yes,
Very
ma'am.
Yes. Okay. We'll make sure that we get that to you. Travis has those, so he'll be emailing them out. So I will probably double check to verify your email address so that I can get that to him.
Cheers.
Cool. Thanks. Gina, we have another Lowe's. So that is still on the board. The only thing not on the board is Dairy Maids.
Gina, you're muted if you're speaking.
Hi, can you guys hear me?
Yes, we can hear you. What is your
cool. Okay,
what's your pick?
I was about to start typing. Well, first I wanted to say thank you guys so much. Today has been an awesome presentation, but I will take Truth Barbecue. I've been looking for an excuse to check that place out, so this will be perfect.
Oh, you're in for a treat. Seriously.
I insure Truth. That's why we did them. The owner is awesome. We'll make sure to get you that gift card.
Oh, cool. That's great. I cannot wait. Thank you guys.
You got
Thanks, Gina. And last but not least, Micah, you have your choice of anything on the board except for Houston Dairy Maids. I think we have another Truth. Is that right, Mark?
Yep.
Okay. Anything but Dairy Maids. We got everything else.
Awesome. Yeah, thank you everyone for this really informative presentation. I'll do Boomtown. I live walking distance from there.
Ooh. Boomtown's good. I only get over there like once a month, but it's tasty. I like Boomtown a lot. It's a good choice. Thank you all so very much for hopping on this call and listening to us ramble about the home buying process for nearly 2 hours. It's a ton of information. And I know a lot of it doesn't get retained for very long, but these seminars are so helpful because when you do get around to buying a house and your agent or your lender or your insurance agent or anybody mentions something that's already been said to you, even though it won't be something that you already just innately remembered, it'll come back to you so much faster. And you'll be like, oh yes, I remember hearing that before. That makes a whole lot of sense. Thank you for reminding me, rather than just going through this entire process completely blind in the future. So I'm glad you guys all had the time to sit down and do this. I'm excited for you starting this journey. This is such a huge deal. Everyone on this call that has presented either owns a home or has owned a home. So we've all been in your situation before. We know exactly what it's like. And we lost Travis for a second, but he's back. So we've all done this. We all know exactly what you're experiencing or what you're feeling. And, you'll be sure to have our empathy and our compassion as we go through the process, because we know what it's like to just be super stressed out during the option period and be overwhelmed by a mortgage underwriter asking a billion questions and trying to do your job too. Don't forget, you still will be working during this entire process, and it will, Murphy's Law, it'll be the worst work week of your life when you're in the middle of trying to do inspections and get insurance and get your mortgage rolling. But we're there for you. We're all here for you. And we're excited to start this journey with you. And we'll be here when you're ready to get the ball rolling. If you have any questions, now is the time to unmute yourself and ask questions while you can talk to these people right here, right now. Any questions? No questions.
I have one question, like a first-time home buyer question. How is property tax factored into the mortgage, or how is it paid?
Great question. Chad, do you want to take that?
I'd be happy to. I was going to say first-time home buyer workshop. I thought this was the second-time home buyer workshop. No, is that wrong one? No, I'm kidding. Great question. Yeah. So whenever you're buying a home, depending on how much you put down, you sort of have a choice. If you're putting 20% down, you can choose to have your taxes and insurance included as part of your mortgage or not. But if you're putting less than 20% down, typically your taxes and insurance will be escrowed into as part of your mortgage payment. And so every month when you make your payment to your mortgage company, you're going to have the principal and interest component, the mortgage insurance component if you're putting less than 20% down, and then homeowners insurance for Mark, and then property taxes for whatever county in which you live in. And so, and generally when I go through an official loan meeting, I'll go through all of those details with you, and I'll talk to you a lot more about property taxes, because property taxes vary quite a bit in and around town. But if you're an interlooper, they're pretty straightforward and not too complicated.
Is there a rule of thumb, Chad? Like, a certain percentage that you kind of tend to see?
For property taxes?
Yeah.
Interloop is usually around between
Recording
2.3. I think that's Travis. Travis is doing that, I think.
Oh dear.
So anyway, so interloop, it tends to be between 2.3 and 2.7% for the most part. But as you move around town, they can move really high as like, I've seen as high as like 3.8% down in Manville, Texas. Those are really, really expensive taxes, and they can really impact your overall monthly payment. But most of Harris County is usually going to be in kind of the low to mid twos.
Any other questions? That was a great question. Is there anything else that comes to mind?
I have a question. What about getting a mortgage if you're self-employed?
Very, very good question. So self-employed borrowers tend to always have a little bit more of a challenge going through this exercise, because a lot more paperwork is generally required. But sometimes it can depend on how long you've been self-employed. Usually the rule of thumb is we need at least 2 years tax returns for a self-employed borrower. Some self-employed borrowers, I had one today who reached out to me. She's been self-employed for 30 years. And so for her, and she's got really good credit. So for her, I only need 1 year's tax return. But generally we look for 2 years, and we're looking for stable to increasing income, meaning we want to see that the income that we're calculating for you is manageable and stable. COVID has caused a challenge for a lot of folks because 2020 was such a rough year for a lot of people. Fortunately, 2021 seemed to be a lot of people rebounded. So I think once we get 2021 tax returns filed for a lot of self-employed borrowers, it should get a little bit easier, hopefully. Does that address your question?
It does. Thank you.
Absolutely.
I have a question. So as a home buyer, how much do I have to pay the realtor?
That's a great question.
It's a really good question.
I'm typing a quick little snippet to go with this attachment. Okay, so you have lots of attachments in the chat, folks. If you need to download things, definitely grab them before we close this thing out. The buyer does not directly pay the realtor. That's unique to Texas and a few other states. In some states, buyers do directly pay their agents. In Texas, the seller pays their listing agent a negotiated percentage of the purchase price or the sales price. And that listing agent agrees to give a percentage of that to a buyer's agent. And that information is pre-disclosed on HAR. So we automatically, I know upfront if the property is or is not paying for whatever reason. The not paying thing really never happens. But in the event that a property is not paying or is paying, or that a listing agent is paying less than what we've agreed, you will make sure I'm compensated. I would come to you before even showing you and bring that to your attention and let you make a decision. It has never come up in my career because every house on HAR, the listing agent has already agreed to share their commission that they're earning from the seller with the buyer's agent. So in Texas, a buyer does not pay the buyer's agent. It's paid for by the seller. Great question. Any other questions?
I have a question.
Yes, Sam.
So I appreciated what you said about finding a realtor that kind of suits your personality and you're going to work well with. What is the appropriate way to ask those questions without like impending too much on someone's time? Is it like a coffee date? Is it an email?
That's a good question. I don't think I've ever had anyone necessarily ask me a list of, predetermined questions to figure out if we're a good fit. Not that that's a bad idea. It's a great way to do it. Kind of like an interview process, right?
Yeah.
I generally try to meet potential buyers for a first-time consult at like a coffee shop, and we kind of go through the process and go through their needs, and they can ask me questions and we kind of go back and forth. It's a little bit less formal than an interview, but I take that meeting without any assumptions that they're my client or that I'm even a good fit for them or that they're a good fit for me. I'd rather meet face to face and build that rapport and, kind of fill someone out than do it via email. Like, 'cause I mean, I have questions too, right? And I feel uncomfortable kind of asking a bunch of private personal questions over email or over phone. So I like to have that meeting in person anyhow, even if we walk away and we're not working together. It was an hour of our time and a cup of coffee.
Mhm.
Does that answer your question?
Yeah, it does. And are there any like red flags when you're seeking realtors? Like if a realtor doesn't want to have that coffee date with you, it'd probably be a red flag. I would think.
Well, I would say I can't say that every realtor does it the same way. I mean, that's how I like to do it. I guess I could see how somebody maybe wouldn't want to waste their time. I find that is a good way to spend my time. So I wouldn't necessarily say that it's a red flag. I think my biggest red flag when interviewing agents would possibly be someone who says they can do it all. I do know agents who work from Galveston to Huntsville, but I don't know many. So someone who says that they can do anything and everything everywhere, that they can do $100,000 to a $1.5 million transaction, and they can do farmland and they can do city properties and they know old houses and townhouses, like that doesn't mean that they can't do it, but they might be a jack of all trades. That might be too much. They may have too much general knowledge and not enough specific knowledge. And you might want to try to find someone who has the experience and the knowledge in the specific types of properties or locations you're considering. I also feel that's an important thing that you'd want with an agent because the law requires it. Federal law requires that agents have, now I can't get the right word out. They're required to have knowledge of areas, house styles, and like market conditions to practice real estate in a specific house style market area, or geographic area, or like market conditions. If they don't have that knowledge, they're technically required to have a mentor guide them through the process or refer the transaction out. So I guess that's a reason that I'd be nervous if someone says they can do anything and everything without double checking that they really can do anything and everything, because you might instead end up getting yourself in a situation where you're working with an inexperienced agent. And it's a really big purchase to have somebody that's not experienced trying to help you navigate it. Does that make sense?
It does. Thank you.
Good. What else? Any other questions?
I would also like to add, you might want to make sure that your agent is full-time. Otherwise, you might not, be able to, you have to work around their schedule, basically. They're doing something else part-time. So, at the title company, we do get people that call during the process and they can't get a hold of their agent or, different scenarios, but I feel like a full-time agent would be a priority.
Good point. Yeah.
Helpful. Yeah. Thank you.
Okay, great. Those were some great questions. Do we have any others before we wrap this up? I don't want to keep everybody too late. I feel like I presented all my questions early on via email to everybody. I was like, hey, make sure you cover these things. So if there are no other questions, we'll let you go. I'll make a point to reach out to everybody and make sure that you have all the contact information you need for everyone that was on the call tonight so that you can reach out to them when you're ready. I'll make sure to contact all of you as well to ensure that I have the right contact information to get your gift cards to you, whether we're texting them, emailing them, or mailing them over. And, if you misplace anything that we've sent you, just feel free to reach out to any one of us and we'll get you what you need as fast as we can.
Awesome. Thanks
Thank
so
you
much,
all.
Hank.
Thank you so much, everybody. Really appreciate all of you for being on the call. Have a great night.
Have a great night, everybody.
Bye, y'all. Thank you. Thank you, Angel, for doing this.
I thank you. This was great. This was wonderful. All right. Fantastic.
Bye, Angel. Thank
Hi,
you.
Travis.